AT&T shares lower Thursday despite reporting third quarter earnings that beat Wall Street estimates. The telecom giant reporting adjusted earnings per share of 78 cents on revenue of $40 billion during its latest quarter. AT&T beat expectations on a closely watched industry metric, postpaid phone subscriber growth, the company adding 928,000 during Q3. I'm joined by Andrew Wallenstein, Variety Intelligence Platform Chief Media Analyst, to make sense of AT&T's third quarter. Andy, there was a lot to like from the report, but I do want to talk about that postpaid subscriber growth number that we saw. It was really strong, not just this quarter, but it has been ever since COVID sort of boosted people signing up for broadband, people signing up for new wireless plans. So how long and how sustainable do you think this growth is, and do investors have to worry if it does slow down?
I do wonder, because I do think there has been a bit of a COVID bump here, and I also think there's been a bump in terms of the promotional spend, in terms of what all the carriers are doing for iPhone 13. I don't think that spend is going to be sustainable. I think the subscriber numbers will come down, but give AT&T some credit. This quarter, they really took that number very high, and that's a big win for them.
You know, I am a little bit concerned, though, because the price action that we saw today for AT&T following its earnings kind of tells you what the sentiment is there on Wall Street and for investors as well. Initially, the stronger than expected quarter boosted shares about 1% in the pre-market. Then we saw it sink about 1% when the market opened. And AT&T shares down 17% since it announced the fact that it will be spinning off Warner Media and merging it with Discovery, 12% or so lowered this year. So it's really underperforming the broader market and its peers. So I'm wondering, what do you think AT&T has to do here to really gain some meaningful momentum behind its stock?
Yeah, I mean, the truth is that as good as this quarter looks, I don't know that it helps that much. I think AT&T is going to be in a bit of a doghouse with investors for quite some time. They've obviously gotten Warner Media and DirecTV off their books. That will help to some degree with a gigantic debt load. What number is it at now?
$170 billion, I believe.
Which is completely insane. And, you know, there's still a lot of spending that has to be done when you look at the rollout for fiber, the rollout for 5G, the promotional spend I was talking about on wireless. I think investors are looking at all this and saying, great, what gets us excited? What gets us thinking this is a growth story? AT&T is so far from that. They're still in recovery mode.
And we do have to also mention the fact that they announced that they would be slashing their dividend, which of course was a huge gut punch to investors. AT&T really didn't want to have to go there, but it figured that it does have to. So that's something that you have to think about going forward as well. About 50% lower in dividend is something to definitely be worried about. And I think investors were going to be paying close attention to that. Switching gears here, though, I do want to talk a little bit about HBO Max and HBO. It was a pretty solid quarter for them as well. So what do you see for them on the content side, but also just what to expect going forward when we do see that spinoff?
Yeah, I mean, I think everything that's going on right now doesn't really matter. It's when the Discovery merger happens, that's when HBO Max will be judged. This quarter, though, was an interesting mix of numbers. The numbers domestically actually went down, which was to be expected because they're no longer being sold through Amazon channels. They wanted to get that direct data relationship. Makes sense. At the end of the day, investors aren't going to really care about that decline because the global numbers are up. They're still going to hit their best projections for the year. I'm actually very excited for the fourth quarter for HBO Max. They've got some big programs. Matrix Resurrections, I think, is going to do well. Dune's about to come out. Succession on HBO is a big show. So I think they're going to end the year strong. But as again, I don't think it really matters, not till this Discovery deal is done and we see what Warner Media does in terms of a combination of HBO Max and Discovery. That's when I think they'll be judged.
Okay, so to that point, what do you think about new management being David Zaslav taking the helm there in that combined company? Do you think that that's the right move? What's going to happen to Jason Kilar? What are your expectations?
I don't think we know what's going to happen to Jason Kilar. He's minding the store right now. He's saying that he hasn't made a decision about next year. Don't really know if it moves the stock either way. I do think it is more about Zaslav, who, of course, comes from old media. He sort of has had a career that's gone for decades back to NBC Universal. Big winner in terms of bringing his Discovery property together here with Warner Media and taking control. I actually have more curiosity about another management change there, which is Jeff Zucker, who currently brilliantly ran CNN. seems to be making indications that he's staying for the longer haul, but we don't know what it's going to be. I would expect it'll be a job bigger than CNN. Maybe he takes Jason Kyler's job too. I don't know.
So much uncertainty still left, a lot of questions unanswered with AT&T, but hopefully we'll get those answers when we do see that spinoff with Warner Media and Discovery, and also during its Q4. Thank you, Andy, so much for breaking down AT&T's latest quarter. And if you want more in-depth analysis on AT&T or the rest of the media sector, head over to variety.com/VIP.